Hi guys, Mark Walton here. I started trading back in 2002 and for the first 3 years struggled very badly, and things started to change when I went to longer time frames. I've been teaching people now online since 2008, and I can honestly say I probably know I could count on one hand the number of people I know that scalp or trade shorter time frames who actually do this for a living and do well. I moved to longer time frames. I'm going to show you now what I do on a weekend, and therefore you could copy this, and I'll show you a few strategies as well. But believe me, I have taught, well, between us at Forex Mentor Pro, almost 10,000 people now over the last 10 years, and I also work one-to-one with clients who want to do this as a profession, and all of them have improved by going on to longer time frames. It's less stressful. The markets are closed. There's nothing happening now. There's nothing that's going to get you excited and sucked in. It helps you to reduce over trading, over leveraging. It reduces stress because you're planning now. You're just planning a mathematical thing on a weekend with no distractions. And the best part of this, it takes me probably a few hours on a weekend to do my analysis. I then prepare videos and share that analysis with members. But for you, that's all you would need to do. Then during the week, manage it. So if you were working in a day job and it's difficult for you to trade, I have three types of trades. I have an A grade, a B grade, and a C grade. And an A grade is an order I will place at the market open. A B grade is one that I might need to wait for news to come out, or I might need a candle to close in a certain position for me to get interested, and then take the trade. And finally a C. A C grade is an area of interest. But anyway, I'm just going to quickly show you, before I do my analysis today for the members, I'll show you the process. I start on a weekly or even a monthly chart at the month end. I look on simply for candlesticks, and I'm just trying to get a feel for the direction and for the major areas where price is most probable that it's going to react. And that's what you base everything that you do when it comes to trading. You are working on probability. It is supposed to be completely random. No one is supposed to be able to predict what is going to happen next. And yet, if you learn technical analysis, you can find that you're often spookily accurate, because price will bounce to the pip from hundreds of pips away. And why does it do it? Well, I think it becomes a self-fulfilling prophecy, because so many people are watching the charts and watching the candlesticks and what's going on, that then helps the price to react in an area. You can do this on smaller time frames. The smallest I go down to is a 4 hour. But anything below that, you are just at the mercy of the brokers, and you are at the mercy of the market makers, and you just basically can end up getting sucked in and taken out. You pick a trade, you get into the trade, you have a 10 pip stop or a 20 pip stop, it comes down, it takes you out, and then it goes 500 pips that you calculated anyway. So by doing it this way, you do not need to have huge stops. That is a myth. And that's what a lot of people say is, oh, you don't trade longer time frames because it's huge stops. It is not the case. But anyway, let's have a look at the week ahead. So here on the Canadian dollar, since July of last year, we are in an up channel, and therefore the main areas on this pair, if you were looking to take trades from the edges and you were ultra conservative, you would be looking down here. So anywhere around 123, 12400, and you would be looking at the tops. Last week we had another bounce at 130, that I'll show you in a moment, and if not at 130, 120. However, it is all rather a long way away. Is there any other clue on here that this would be a good area to buy in this bottom area? Well, let's put a fib on. So if you add Fibonacci to the equation, suddenly in the same area as price comes down to here, that would be very attractive. And you could also then start to look across to the left. Always look left for previous support and resistance. Has this area been important in the past? Well, price previously stopped on a weekly chart twice here recently. It stopped here after a breakthrough. Yes, it got messy here, but it closed again here as well. So clearly price has interacted here in the past. However, the probability is it probably won't get down here this week. So let's have a look at a daily and see if we can see any other opportunities on the Canadian dollar. So this is on the daily chart. And a couple of weeks ago, a couple of months ago now, as price was coming up to this area, I pointed out to members that 130 is huge on this pair. It is the major line in the sand before a move beyond. and therefore many of them were able to short here, and this went 200 and odd pips, and it did it again last week. This was a surge up because of the Trump announcement about Iran. There then is the theory of the oil prices going up, which is good for the Canadian economy, and as this is the USD versus the Canadian, the USD weakened against the Canadian dollar and it has dropped down here. Now, these two lines, I use EMAs. EMAs are simply moving support and resistance, and the main one is the 200 and the smaller is 55. So it's come down and it's stopped here. So I could continue to look for the edges. So 130 is still interested to short. Here on a daily, I would be interested to long around 12600. Once again, Fibonacci, again, bang on this area. So this now, I have multiple reasons to be interested to take the trade here. In the meantime, I will watch this at the market open because this is an uptrend. It's 50% fib of the recent move, and as we've seen it previously, it's in a weekly up channel as well. So the bias is slightly too long at the moment, but before we would take the trade, you would just check out some news, and I'll show you that in a moment. But a lot of bank traders in the old days used to trade one currency pair, and therefore if you imagine you only had one pair to trade this week, you need to be looking at the areas where it's most probable that price is going to react. Now, in recent weeks, we had a different scenario. For this period here, doesn't look it now, this is a 10-day period of time, price was range bound. And what that means with a range is that price is simply coming up to an area and bouncing back down, up, down before it broke through. And on this scenario, for example, here, the lows down here are only 20-30 pips away. You could be mega conservative below the EMA, but this channel here is almost 100 pips. And at the top, you would be putting your stop above recent highs, maybe above the whole number, and you're looking again, 70, 80, 90 pips channel. This is something to go into on more detail on a different day, but it's just another way to trade when markets are going sideways. I explained earlier, part of the reasoning for the move in the USD falling against the Canadian dollar is oil prices have shot up post the news from Trump. Here you had an area of previous major resistance on oil, and you saw how price came up to this area, did it in the past, it's moved away, came up again, moved away. This is the kind of trading that I prefer. I wait for a break and close of a major area. I then want to pull back to the line, which means often I can get away with a 20-30 pip stop, and then I am looking for a big move. So you can use this kind of breakout strategy on Forex, gold, oil, many other commodities. You can also use this kind of mentality to keep you out of bad trades. The pound in recent weeks made some serious drops after the Bank of England's Governor Carney had come out with a lot of negative speak. Now the issue has been in the last week or so, it's gone absolutely nowhere. This is a spinning top, indicative of the fact that price is now in equilibrium. Here was the opportunity. This is a break of a daily trend line, then that pullback again, and you could have shorted here, and that one went 300-400 pips. There was also another opportunity here. This was another major line in the sand, support and resistance broke, pull back, and it did it again down here. The last 5 or 6 days, it has been moving sideways, and like the CAD, you could be looking for longs down here with a small stop or shorts here, unless or until it breaks out of an area. But I am not so keen on this at the moment, but I have seen a better opportunity on the pound Aussie dollar. Once again, very simple chart setup. You're looking here, it has stopped virtually to the pip on a major support line here. So this is a big area for this one. This is make your mind up time. To short this, I need this to break and close on a daily, then a pullback with a view to a short, and it could go a long way technically. Equally, I'm going to watch at the market open, because if it starts to move north, then there's 550 pips to the recent high. And again, you're looking for major areas of previous support and resistance. Where did it stop last time? Where is it most likely to stop this time? If you add the EMAs onto this as well, I have a major area down here. This is 17600. If we stick a fib on here from a recent low to a recent high, Again, 78.6, the major line in the sand for me. Previous major support and resistance. If it comes down here, I will long this pair, and I would only be looking for a stop below the recent low down here, around 40 pips away, but a potential gain of 600 back to the recent high, even further 900 pips. So the risk reward potential of this is clearly worth taking. Other areas of interest, obviously, you would be interested for a potential short at the top, anywhere around here. And this was also range bound recently. You can see here, this range here is 300 pips. Once again, had you taken the short at the top, your stop would have been 40 odd pips to win 300. That is how you make money trading Forex. Now again, this area broke, candles closed, pulled back, it went a few hundred pips. Euro Aussie this week, we took this one, and I have to give the credit to one of my students, Mark. He pointed this one out to me. This was a break of a daily trend line, pull back to the line, and this currently is 95 pips in profit with the stop just above the recent high from Friday. So the idea, the hope here is this is going to keep going. If not, if we get taken out, we've made 90 pips. The potential for this to drop a lot further is very tempting. This is the pound yen, and the pound yen recently broke out of a channel, and again we had a huge reversal candle here, came down, broke out. Where did it stop? It stopped at 150, then it broke again, then it pulled back. So you're looking at the pullback of 150, huge area. Where has it stopped now? It has stopped on a trend line that goes back to August of last year. So on a very simplistic level, if you want to start to become profitable, zoom out to longer time frames, look at the big areas, and watch for these breaks and closes and pullbacks. And it's not only on a daily, you can do this on a 4 hour. This is the New Zealand dollar, Canadian dollar recently. Breakout, pullback, and this one went 130 pips. Now I mentioned earlier, before I finish my analysis on a weekend, I then go off and look at the news and what's coming up for the week ahead, things that I need to be careful with. This is a really good site during the week. It's closed on a weekend, but on a morning for me in London time, it gives me an overnight wrap up of what's been happening in the Asian session, and it's giving you news throughout the day for things that are going on around the world of a financial nature that may affect currencies. You also have Forex Factory. They have news items in here as well, particularly what Trump's up to on any given day. Bloomberg, one to watch as well. This is talking about Italy. Italy has a major problem with its banks and debt, and yet is seen as too big to fail as far as Europe's concerned. Also, as ever down here, talking about Iraq, talking about oil. So clearly oil is going to be important again this week. If you're then looking at specific pairs, for example, the pound, I look at the ft.com, and here they will be talking, no doubt, about Brexit and all the other things that are going on that could affect the British pound this week. This is a site I use for Australian news, so you get the picture. Now, for the week ahead, I am interested, for example, to trade the Aussie dollar. However, I need to be careful because at 2:30 in the morning on the Tuesday, they have the monetary policy meeting minutes. It's a red flag event, could have a major impact, and after that the RBA assistant governor speaks. That could have a major impact, so I need to be careful with the Aussie dollar around that time. And also later in the week we have wage price index, and you've got employment change, unemployment rate. So a lot going on for the Aussie dollar this week, and these are where you're talking in terms of a B grade trade, because you're looking to tiptoe around this kind of news event. You do not want to be opening trades just before or just after. Let the dust settle. But if you move to longer time frames, guys, it made a phenomenal difference for me and to everybody I've taught over the years. It is the way to trade. Takes the stress out, a lot easier. Make the plan on a weekend and trade the plan during the week.